Sunday night, the futures market looked calm. This morning, it isn't. A fresh clash across the Gulf has S&P futures down about 0.5%, NASDAQ futures down over 1%, and Micron's getting hit for 6% before the opening bell has even rung. Good morning. It's Monday, July 13th. I'm Nick Vertucci with Eleanor, Whitfield, and Marcus Brooks. Grab your coffee, because between Friday's close and what's stacking up for tomorrow, there's a lot to get through. We'll recap the week that was, walk through what just broke overnight, and set up what might be the single busiest morning of the summer.
Morning, Nick, and I use busiest morning loosely. That's doing a lot of work.
It's earning it. Wait till we get there.
We will. First, business season record, quick, because there's genuinely nothing to score today. Eleanor, you're sitting at 2-2, streak of -1. Marcus, 2-4, streak of +1. Sarah and Dave are on the shelf at 0-0, 0-1. They were only in the room for the weekly show. Nobody's calls from Sunday are checkable yet. Those were resolved by Friday, so the board doesn't move today.
Small mercy.
One thing I do want to flag before I move on, because it's genuinely funny in a bad way. Eleanor, on Saturday's show we said bank earnings land Monday. Sunday we corrected ourselves on air and said, no, actually it's Wednesday.
I checked twice. I was very confident.
I know. It's neither. It's tomorrow, Tuesday. Wells Fargo's own newsroom has a press release with the date on it. 3 episodes, 3 different days, and the correct answer was the one we hadn't tried yet.
That's humbling. In my defense, the actual number I care about, the net interest margin, hasn't moved. It's just landing a day sooner than I told everyone to expect it.
So your call gets less time to marinate.
My call gets less time to marinate. I'll take it.
Fine, we're square. Let's start with what actually happened while most of us were asleep, because it's the reason futures look like this. Eleanor, walk me through it.
Sunday evening, the tape genuinely looked fine. Dow futures roughly flat, S&P firmer by about 0.2%, NASDAQ 100 leading with a 0.6 gain. Calm, given the backdrop. Then sometime overnight that broke. Wire reports point to a fresh military exchange across the Gulf, the interim ceasefire fraying further, and by the time pre-market trading picked up, S&P futures had flipped to down about 0.5%, NASDAQ futures down over 1%, Dow futures down around 0.4.
That's not a small move for an overnight flip.
It isn't, and a part that actually worries me is the speed of it. Calm at 10 p.m., ugly by 6 a.m., That's not a market digesting new information calmly. That's a market getting surprised.
I push back a little on surprised. This is roughly the 4th time in 3 weeks we've had a weekend flare-up, followed by a Monday flinch, followed by a Tuesday or Wednesday recovery. The pattern's becoming the story as much as any individual headline.
Sure, except patterns break. That's sort of the whole problem with trading them. And this time the flinch has actual teeth in one specific place. Chips.
Give me the numbers, not the vibe.
SK Hynix, which debuted on the NASDAQ Friday to a lot of fanfare, is down about 10% in pre-market. Micron's off roughly 6%. SanDisk is down around 7%. That's not oil-adjacent noise. That's a targeted move and exactly the group that had the best week on the board.
Which is also exactly the group most likely to get sold first in any risk-off morning because it's had the biggest run. I don't think 6 red points on Micron this morning tells you the DRAM thesis broke overnight. I think it tells you futures desks de-risk the winners first when the geopolitical headline is bad enough.
That's a fair read of today in isolation. It's a less fair read of today plus the last 2 weeks. Micron's now looking at a 5th red session out of the last 10 or so. At some point de-risking the winner, and the market doesn't believe the winner start looking identical from the outside.
They're not identical though. One's temporary and one isn't, and today alone can't tell you which.
Hold that. We're about to spend real time on exactly this fight. Let's finish setting the scene first. Sarah's not with us today, so somebody's got to give me the oil number.
Brent's above 77, WTI's above 72, both up sharply on the week even before this morning's move. It's the same escalation loop we've been in since February, no confirmed hit yet, on an actual loaded crude tanker, which was Sarah's line in the sand Sunday. Everything so far has been container ships and smaller vessels.
So her call's still alive.
Her call's still alive. Nothing's crossed her threshold yet.
Okay, zoom out with me for a second, because we haven't actually talked about Friday's close yet, and it's worth doing before we bury it under this morning's headlines. Marcus, take me through the week that was.
Genuinely one of the stranger weeks of the summer, in a good way mostly. S&P finished Friday at 75.75 and change, up about 0.4 on the day, up roughly 1.25% for the week. Nasdaq Composite closed at 26,281, clawing back to positive for the week after a real midweek scare. Dow settled at 52,637, up on the day, but down about 0.5% for the week, even after touching a fresh record above 53,000 on Monday.
So the Dow set a record and still lost money for the week. Say that slower for anyone doing the math at home.
Right, it's not a typo. It touched a high early and then bled the rest of the week while everything else caught up and passed it. And the piece that actually worries me more than Monday's chip sell-off is the Russell's small caps fell again Friday, underperformed the whole week, second week running.
Which is my point from Friday's show, and it hasn't gone anywhere. This is a genuinely narrow rally underneath a record-adjacent headline number. Meta and a handful of chip equipment names did almost all of the actual lifting last week.
Let's go there next, because it's the story of the week and it's directly relevant to the fight you two just started. Marcus, Meta.
Best week for Meta since early 2024, up roughly 15%. Erased its entire year-to-date loss in 5 sessions, and it wasn't one headline, it was a sequence. New image model midweek, an agentic coding model Thursday, a new cloud unit to sell excess AI compute to outside customers, and confirmation their in-house chip, codenamed Iris, built with Broadcom, fabbed at TSMC, starts production in September. 6 weeks of testing done without a major issue, according to reporting.
And the market re-rated the entire spending story off that, which, fine, that's real news. But watch what rode along with it. Applied Materials, Lam Research, KLA all up more than 4% on the week just on Meta's custom silicon plan, and Broadcom separately extended its Apple chip deal, something like $30 billion over 5 years, through 2031.
Plain version for anyone who just hears custom silicon and tunes out. Why does a chip designed for Meta's own data centers move stock prices at 3 other companies?
Because none of them make it alone. Broadcom designs it, TSMC fabricates it, the equipment makers sell the machines that do the fabricating. One customer's chip order is revenue for the entire supply chain behind it, not just the company whose name is on it.
Got it. So, question for both of you, live, because this is where this morning's pre-market action actually matters. If the chip trade is this broad and this healthy, why is Micron down 6% and SK Hynix down 10% before the bell?
Because Micron and SK Hynix aren't the Meta trade, they're the memory trade, which is adjacent but distinct, and it's had its own separate run on a DRAM supercycle thesis that's more exposed to risk-off mornings because it's newer and thinner. I still think it's a different animal than Broadcom and the equipment names, which are tied to actual signed multi-year contracts.
I'll take the other side properly this time, not lightly. If the healthy, broad AI trade story were actually true, a bad morning wouldn't discriminate this cleanly. You'd see everything down 2 or 3% together, not memory down 6 to 10, and equipment names probably opening flat to slightly red. What I see instead is capital rotating hard within the AI trade, out of the parts that ran the fastest and have the least earnings support, into the parts with contracts already signed. That's not breadth. That's the opposite of breadth. It's concentration finding an even smaller circle to hide in.
I don't buy the opposite of breadth. Rotation within a theme isn't the same as the theme breaking.
Steelman her case for me. Best version of what Eleanor's actually worried about.
Fine. The strongest version is the market spent all last week telling itself the AI build-out is now diversified. GPUs, custom silicon, memory, equipment, all rising together. And this morning is the first data point suggesting that diversification is fake, that it's still one trade wearing 4 tickers, and the first geopolitical scare peels off the newest, least proven layer first. If that's right, today's memory sell-off isn't noise, it's the tell.
That's better than my version. Thank you.
And you're not convinced.
I'm not for what it's worth today specifically. But I'll say this straight, if Micron's still down when equipment names in Broadcom open flat or green, that's a real split I can't explain away as risk-off across the board, and I'll say so.
Then that's our split for the day, and I'm not going to force a resolution neither of you actually has. Eleanor thinks this morning's chip sell-off is the first real crack in a rally that was always narrower than it looked. Marcus thinks it's memory names getting sold first in a risk-off morning while the actual multi-year contracts hold. Watch the open. If Applied Materials and Broadcom trade flat to green while Micron and SK Hynix stay deep red, that's Eleanor's case. If everything chip-related gets sold together and then everything recovers together by Tuesday afternoon, that's Marcus's.
I can live with that as the test.
Same. I actually don't know which way this one breaks today.
Good. That's the honest answer. Let's move to rates because Friday had a genuinely underrated story sitting quietly under all the chip noise. Eleanor, the 30-year.
Thursday's 30-year auction priced at 5.058%, the highest award on a long bond in almost 20 years. Headline-wise, that sounds alarming.
Is it?
Less than it sounds, actually, and I want to be precise about why, because the mechanics matter more than the number. The yield came in below where secondary trading had it right before the deadline, and the tail was smaller than dealers expected. That means real buyers showed up at that level instead of primary dealers getting stuck holding the bag. A weak auction shows up as a fat tail and a yield that blows through secondary pricing. This did neither.
Translate tail for me because I guarantee half the people listening just nodded and don't actually know what that means.
The tail is the gap between where the market expected the auction to clear and where it actually cleared. A small tail means the market's estimate, and the real result basically agreed. Demand was there. A fat tail means the Treasury had to accept a worse price than expected because not enough buyers showed up, which is the actual bad news version of a weak auction.
So the 20-year high headline is scary. The actual mechanics underneath it aren't.
Correct, and it lines up with what credit is telling you separately. Investment-grade spreads are sitting around 80 basis points, high yield around 267, both close to multi-year tights, way under the roughly 350 level that usually flags real late-cycle stress. If the bond market genuinely believed this hawkish turn was the start of something that breaks growth, you'd see those spreads widening. They're not.
Which is the case for higher for longer, not recession. And I actually agree with that read. My disagreement with Eleanor today isn't about rates for once.
Correctly noted. Duration's still the position to watch. With some desks pushing their rate cut call out to 2027, the front end keeps offering competitive carry versus reaching for yield further out the curve.
And this is exactly why tomorrow is such a loaded morning. Because none of this happens in a vacuum anymore. Let's actually build it out, because I don't think either of you has said out loud yet just how much lands in about a 90-minute window tomorrow.
Go ahead, you've clearly been waiting to say this.
June CPI drops at 8:30. All five big banks, JP Morgan, Bank of America, Citigroup, Goldman Sachs, Wells Fargo, report before the open same morning. And new Fed Chair Kevin Warsh gives his first congressional testimony at 10 in front of the House Financial Services Committee with that CPI print landing roughly 90 minutes before he even sits down.
When you list it out like that, it's genuinely one of the more stacked single mornings I can remember.
That's the whole point of saying it out loud. Eleanor, the number itself, what's consensus looking for?
Headlines expected to ease to something like 3.9% year over year. Core holding closer to 2.9, both still well above the Fed's target. But a print in that range doesn't force anyone's hand. The complication is the same one Sarah flagged Sunday. Some of the collection window for this data predates the weekend's oil spike. If Brent's still elevated by the time this actually prints, the disinflation story the market wants to hear might not be the one it gets in August's read.
And Warsh has to stand up 90 minutes later and say something coherent about whatever that number says, in front of a committee that already knows the Fed's internal vote wasn't unified. Nearly half the committee's on record wanting another hike before year-end. That's not an easy room to walk into with a hot print behind you.
What happens to the tape, same day, if CPI comes in hot?
Historically, a hot core print with a Fed already leaning hawkish is a rates up, growth down day first long duration names, and anything chip adjacent feel it, before banks do, and banks are reporting into that same tape, which complicates reading their stock reaction independent of the macro noise.
I'd watch whether it's a one-day flinch the market shrugs off by Wednesday, the way it shrugged off basically every scary print since spring, or whether Warsh's tone at 10 o'clock turns a bad morning into a bad week. That's the actual swing factor, not the CPI print in isolation.
And underneath all of that, the banks themselves. Eleanor, your call is specifically Wells Fargo's margin, not the group.
Right, because it's the cleanest read on the deposit-to-loan spread, without a trading desk muddying the number the way JP Morgan's or Goldman's results tend to. Flat or better margin says the curve's still paying banks to exist. Compression says something in my rate thesis is wrong, and I'd rather find that out from Wells directly than argue about it in the abstract.
My caveat's the same one I gave Sunday. Good margin doesn't matter if loan loss provisions are quietly getting worse underneath it. Everyone's going to fixate on the spread number tomorrow and might miss it if credit quality's rolling over somewhere in the small business book.
Noted, and we'll actually have real numbers to fight about by tomorrow afternoon, instead of previews. Let's shift gears completely for a second, because Friday had one more story that got a little lost under meta and the geopolitics, and it's a good one. Marcus, WD-40.
I promise I only need one pun and then I'm done. The stock didn't need any WD-40 Friday, it was already running smooth.
That was genuinely terrible.
I stand by it. Fiscal third quarter numbers blew past every estimate, adjusted EPS of $2.33 against a street estimate of $1.57, revenue of $195 million against $173 million expected. Net sales up 24% year over year, operating income up 47%. Management didn't just beat, they raised full-year guidance meaningfully, and the stock traded up more than 10% Friday on top of Thursday's after-hours pop.
For a company that makes a can of spray lubricant.
That's the whole point. It's about as boring and unglamorous a business as exists in the S&P, and it just posted numbers that would be a great quarter for a growth stock. Pricing power and demand held up better than budgeted.
Delta backed that up the same day. Beat estimates, reinstated full-year guidance, raised the EPS outlook range even with fuel costs pressuring margins. Premium travel demand carried it.
So what does a boring industrial and an airline actually tell you together, walking into a week of bank earnings?
That the consumer and corporate end markets are holding up better than the cautious estimates on the street had priced in, which is a genuinely useful data point to have in your pocket before JP Morgan and Wells Fargo start talking about loan growth tomorrow.
It's a nice tailwind heading into the loaded morning, is what it is. Small, boring, and quietly reassuring.
All right, calls. One specific, checkable thing for tomorrow's session, not the abstract thesis. Eleanor, go.
Wells Fargo's net interest margin, flat or better, when it reports before the open tomorrow. If it holds and core CPI comes in at or under 3% the same morning, I think the higher for longer trade in bank stocks has a genuinely good day. Either one breaks, and I'm saying so on air tomorrow.
Marcus.
Micron closes tomorrow's session above where it opens today, green on the day, not just off the pre-market lows. If a stock that's already down 6% before the bell can't even claw back to flat by 4 o'clock on a day with no fresh bad news specific to it, that's a real tell that Eleanor's crack in the trade red is closer to right than mine.
2 calls, 1 clock. Both resolved tomorrow afternoon, no waiting around this time. So here's today. Watch the open for exactly the equipment versus memory split we just laid out. Watch Brent for any sign this weekend's move is fading instead of building. And get some sleep, because tomorrow's the real test. CPI at 8:30, 5 banks before the bell, and a new Fed chair in front of Congress 90 minutes after the number drops. If the show's useful heading into a morning like that, catch our live takes all day at Nova Ventures CEO on X. That's your Nova Ventures morning brief. Have a great Monday, and we'll see you tomorrow.